let's start with an overview of the markets from your perspective and what you're anticipating in terms of movement for the trading day ahead.
Thank you very much, Alishia. What we're expecting today, being a Thursday, that the week is coming to an end. We expect the market to probably trade sideways today because people are still waiting to see the direction of the market coming off from the selling pressure we saw last week as people jostle to meet the deadline for closing the loan book of banks to maximum of 10% exposure to margin. So people are still waiting to see what direction the market will take, and I believe that the market is probably going to take sideways, and even if it's going to appreciate or go down, it will be marginal.
How are you playing the game within this context where we know the banks are still stealing a lot of attention, but there's lots of nervousness in terms of what those margin trading limitations could imply for banks moving forward?
Well, for us, as the banks sit on, as they try to close their loan portfolio the margin portfolio to maximum of 10%, that will probably be like a compelling factor for them to start lending to the real sector. But we see there are still a lot of opportunities in the Nigerian economy, being that it's still a growing economy. The economy is still growing like 7%, and we still believe that the real sector is still presently underbanked. So we believe that even if they're not really doing the margin, going by the opportunities that we're beginning to see on the macro scene, there is definitely more opportunities for them to play in the economy.
Well, some have said that, investors will wait to see things and, to watch how things unfold because they will only unfold to the full extent by the end of next year before we can actually see, profitability return in full force to these banks amidst all the uncertainty that prevails. What would be a stock pick for you within this space?
For the banks, we're still we like the top tier banks because we believe they will continue to be the driver of the sector. And when we say the top tiers, we're talking about the Zenith, the Guarantee, the First Bank, the UBA, and also some of the mid-tier banks that we believe that they are ambitious and they are looking at growing the size of the business, and they might want to take advantage of the window that the CBN has opened for them to actually do a deal, M&A, between now and the end of this month. So we will be looking at some of the mid-tier banks like Diamond and Access, like Sky and Fidelity, that the valuations are also looking very, very good.
What's your view on Wemabank? We heard news yesterday that we've got this company looking to recapitalize after last year's $4 billion bailout and has placed 9 billion naira worth of new shares with 2 local investors. That share price rose close enough to 5% by the close of yesterday's session. Your view on Wemabank?
Well, Wemabank is still one of the banks that are playing in the market. Our view is that we believe that Wemabank, going by the feedback we even had from the management, may want to play on the regional scale now. Going by what has happened in the market, they have identified their strengths and weaknesses, and they know the territory in which they can sell their product. So we believe this might be a move in the right step for them towards achieving their aim of recapitalizing and probably applying for the regional license of Nigerian Bank.
Well, let's shift focus to the oil and gas space. We know that Oando has seen some shift in strategy. It's hiving off a 49% stake in its marketing arm. Has there been market reaction to that news? It's had quite some time to actually digest that news and the kind of restructuring that's happening within the company.
Well, for us, that's a good news because now it's going to give the management of the company a clear strategy and as to what they really want to do. Selling 49% stake in Oando marketing, which focuses more on the downstream petroleum marketing, is just a way of reallocation of capital from the lower margin product to the higher margin end of their business. Analysis of their half year for 2010 shows that when you look at the return on capital employed, you look at the net profit margin, you look at the margins on the product of the upstream business, is way multiples of what you get on the downstream business. And going by the size of the business they are doing, they're looking at how they can have a niche for them in the upstream where they can compete with the likes of Hadax and Afrin, and they will now carve out the downstream to be able to compete with the other downstream petroleum marketing like corn oil, like AP. So we believe it's a very welcome idea, and it will also give the company and the management a good direction as to where to focus their strategies on.
We saw oil explorer Afrinvest's profits soaring in the first half. H1 pre-tax profit coming in at 75.4 million versus a loss of $37.4 million in 2009, and really being buoyed by oil prices. I know that this is not a company that's listed over in Nigeria, but its main producing assets are in the country. What's your view on that company? Because while we've got higher prices on the one hand, the concern is that we have seen production levels dip for this company.
Well, for Afrin is listed on the London Stock Exchange, so there's a limited information on what we can say on Afrin. But overall, we believe that going by what is happening in the macro, by the oil prices, might be one of the contributing factors that affected the operations of Afrin in the last for the half year up to 2010.
On that note, Babatunde, let's leave it there. Thanks so much for your time this morning. That Babatunde Obaniyi, investment research analyst at Afrinvest.